ride on a wet field instead of running on, trying to run on my field. He started to turn, and he could have made it.
You're going to that field point then.
Okay, we need to get rolling here. So are you ready? Is the camera on?
Yes.
All right, so we're gonna call this our recess, finish. So we want to go back and finish and try to solve the problem with 1176. We have. Okay, let's still go to 1176 and Mike, I think, talk and maybe about how we can, what we may do is just kind of fix this and then go back and do additional homework fixes later on.
What I'd like to do is first go to the commissioner's budget,
Which is what time yesterday?
which was 11:15 yesterday. It was a 3-page budget. Where we saved $120,000 out of there. And I'd like to add 2 new line items to there. One of it called vehicle repairs, and the other one, the road equipment. And of that $120,000 that we saved out of there yesterday, I would like to split that 60,000, 60,000 in the commissioner's budget. So that money, that 60,000, we basically use up $120,000, and next year, those 2 buckets are in there, so that when we run into this problem again next year, the mill note for those guys to put money in. You understand what that's all?
Jason, what were the 2 line items again?
One would be,
Vehicle repair.
vehicle repair.
Is that the numbers coming out of 1176?
No, you leave it in 1176 and you're adding it, you're gonna add that account 35501.
That's what I was needing the account.
Pardon?
That's what I was needing the account.
Okay. 35501. You're gonna add that to the commissioner's budget. And the other one is 44200. Road equipment.
So which one are the commissioners?
Oh,
You said 35501. 35501.
that's a vehicle repair.
First one, then vehicle repair.
35501.
What was it looking at?
44200. Yeah, that way that it will start there.
So this will be the code on that. This budget.
It'll be 35501.
Oh,
Now, there should be one measure plus.
It should be 1,000.
It'd be the 1,000 and then it would be those numbers.
Yeah, but I'll just, do you have another one, but I'm just gonna.
What?
Do you know what the codes would be on those? On getting commissioner's budget, since writing the form.
It would be 1,000,
Then,
then 35501.
okay, so it's gonna be the same as it is in the other.
Right,
Just under 105.
yes.
That's 60,000 each, Jason.
Yes. That eats up the 120,000 we saved it. And
So even though those are 2 separate lines, they don't have the same code number?
Would be,
You have the same fund.
the fund number is different.
Okay, can you tell me what those will be, or you're not having?
1,000,
Yeah, I got that one.
35501,
Okay,
0030.
I just did that first slide. And then the other one, and that one was the equipment.
The 35501 is vehicle repair.
And then what was the other one?
44200.
We have 60,000 for the first one, 50,000 for the second.
Both
60 and 60. 6060.
For both.
Both of them are gonna get $60,000.
Both of them, okay.
I'm sorry, what was the second?
442.
So that takes 140,000 out of the other one.
Are we lowering the other amounts like this?
We have to.
Yeah,
I'm just
you're
saying.
gonna have it, and obviously you don't have enough to cover that.
And I guess, if you're involved in this, Patty, I just want to understand, okay? Because our 2025 here, and the new 2025 you gave us today, this morning, okay? The disbursements for 1176 changed by basically $300,000.
On adopted or 25 adopted or 26 proven?
The summary of 25 that adopted.
Okay.
So first, what happened to that money, or what was wrong? I wanted to understand what was wrong, because supposedly, I mean, this was our first complaint, we balanced that budget to a T. We thought we had two additionals in there that were for less than $100,000.
Because they sold some equipment, did some things, put money back in it too. Which then offset the.
Your income is in the income, miscellaneous income, so that's in your receipts.
So it should have been transferred over to that budget.
So then, and then your expenses are out according to what the ledger is, not because of the encumbrance. It's not taken out yet, so that's why it's in there. You put Susan on the speaker and you can double check with her.
So if
Maybe
we,
she can explain it a little bit better than me.
What about insurance checks?
The insurance checks are in miscellaneous income,
Which is
and then they are
county.
dispersed out when they are spent.
So it's in county general, not in theirs.
It's in the highway, so it's highway miscellaneous income.
Should be the whole. You know, we have a miscellaneous income.
Yes, when you sell old equipment, and also the insurance money goes into insurance, line item, which is miscellaneous income.
shouldn't that roll back into the receipts then for 1176?
They're in there. Receipts in that came from the ledger.
The receipts didn't change, it's still $2.17.
It was already in there.
Because that's what our income was, we were getting from the state last year. Was 2.7 million.
Didn't say about
I think it's a combination.
I think it was a combination of that. Yeah.
Did you take,
Based on that 1176, where did you take the 129?
It came out of, it's gonna come out of River Tubes,
Two, yeah.
Yeah.
that counts the equipment and the repair?
Okay.
equipment repairs,
All right.
are coming down to 60,000 right now.
So, is that vehicle repair?
Yes, please.
So it's 400, that should be 400. And then road equipment should be 340. Right?
We're not trying to,
Oh, we get that. He was just asking where you took it from.
So you want to double check with Susan, you want to talk to Susan?
Well, I mean, it doesn't make any sense that our income in state is exactly the same as this year, when we're supposed to have also received those additional insurance monies that should have went up by that amount, right?
All the receipts, all the income, all should look, so.
Yeah, but if we look at 2025 receipts, if we even went back to 2024, I mean, I know they cut us a little bit last year, but how much in the state actually said, how much of the state, and then the rest of it, this way it comes to the company, and all that. Because I think those are places we put it.
We received, I mean, we received everything.
From 20.
Yeah.
25, let's see. Okay, so you've taken 120,000 out, so we have another 100,000 we have to cut. Is that what we're saying?
we have more than that.
A lot more than that.
All right, so I've got Susan on the speaker, can you hear me here?
Yeah.
So ask your guys' questions. So
in 2025, it shows that our total receipts into 1176 motor vehicle highway was 2.797463. That was. How much of that was from the state? So do we know what that total is? Or is that it, 2.7?
Well, what I have is like 1.7 is, highway, it's 50% of highway, the other 1.7 is one and 1173, and then your wheel tax is somewhere around 700,000, and then for a couple of miscellaneous receipts there for 25, and then you have a, pretty much flat line then for 26.
So what we're trying to figure out is, we sold some equipment, and we received some insurance money. And we're trying to figure out where that was put in there.
So you said you received insurance money, you're trying to figure out if that's in the total for 25?
Yes, and also sold equipment money.
Okay, just a moment, take me a moment to get the files and we'll get back.
That's good.
I got another question if I don't disrupt you.
Okay, well, wait for this to open up, you can go ahead and ask it.
Okay, so we also had allocated money to put in a building a couple years ago, but it didn't get done. So that money actually would roll back in. Does that show that money rolling back? That money was actually taken from human capital development, so I don't see how that would affect.
Anything that wasn't spent would be reflected in 24, would be reflected in the beginning balance of 25.
But
So if you understand something, it doesn't go anyplace else, it stays in the fund and it becomes part of your beginning balance.
as far as I know, we never transferred that money to highway. It was actually done out of cumulative capital development, right? We never transferred that. We wouldn't have, why would we have transferred money into highway? We just think our miscellaneous income, there's something not right with that number. We don't see, last year we spent a great deal of time making sure that this 1176 was balanced because we were in the hole last year. And the commissioners cut a tremendous amount of money out there. And yet when I see the disbursements, it's way above what we feel like we budgeted last year.
Your 25 approved budget was 2.872.
Right.
That's what it says on Gateway, that's what I have in the report, that's my thinking on. You then have some additional appropriations and some encumbrances.
Right.
That's where we're coming up with this total of 3.28.
So we're trying to figure out where those, so the additionals that we get out of that account, what were they?
$400,000 in additions.
And we don't recall any,
213 was encumbrances. Those were things that were budgeted last year that you had in progress, that you encumbered them forward to this year. And then you had almost 200,000, 195 that were new additional. Patty, I can give you that detail. There were 3 specific ones.
okay, so those encumbrance balances, we would have already calculated that in last year when we balanced it. We wouldn't have added
Yeah,
it.
that was in last year's approved expenses. So you didn't spend it last year, so you're planning on spending it this year, so you moved it forward into this year.
Right. So that's why we're trying to figure out if they were already encumbered, how did it reduce our cash balance? That encumbered balances aren't included in cash balances, correct? To begin the year.
Yeah, it would be included in the cash balance. So, I don't know if you have a copy of the CFP we talked about earlier, by chance, with you?
Yeah.
Because that CFP shows you the activity in 2024. And where you link.
Oh, the big one, the big CFP. No, I don't have that with me.
Okay, well, I can send this to Patty, I can send this to Patty, but I mean, so last year you brought in 1176, you brought in like almost 2.5 million, left about 31,000 in miscellaneous receipts. You spent, however, almost 2.6, so you used $65,000 of reserves last year.
Okay, so here's the issue, okay? How much was the insurance check? We had a fire.
The insurance check should be there at 25, because there was an additional 262,000 in additional receipts at 25. Was it this year that you received the insurance?
No,
Yes.
well, for 25.
Yeah, 25.
Yeah, we got it this year. What we're trying to figure out is it wasn't put in that account.
So it's part of the receipt that I'm showing you there. Let me go back.
And then what about the so we don't see where it's showing up in our receipts because we meticulously balanced this account last year, would have accounted for all encumbrances. How did we overspend so much? Can't spend what you don't have in the budget.
I have to go back and research and see if you did, you could have done additional, I don't know that. All I know is I think from your financial statements and what you gave us.
We I had you look those additionals up, Patty, what did you tell us?
Was that 196? Susan?
That's this year.
Yes.
That's at 25. And you can start at 24 actual. I don't know how you spent more. If you found it.
No. We're talking about 25.
Okay, I'm sorry, I thought you were back at 24.
No. We're talking about 25. What this shows that we're gonna spend in 25, we did not have that much budgeted.
It's not budgeted, we can't spend it.
Unless there were cuts that didn't make it onto your gateway budget. Your gateway budget for 1176 was 2.8, and your 1173 budget was 1.6
You
million.
don't know what that was. You know what was in, what your total budget was? Yeah.
That's what was approved,
That's
right?
what was approved.
Last year for this year.
Yes, last year for this year, we approved $2.8 million. We had to cut some, we had to cut, gosh, almost $750,000 out of that, out of our proposed budget to get to that number. So the,
This year, you approved another 195,000 in additional appropriations, plus you encumbered 213, so that's how you added to your planned expenses for this year.
Wouldn't we have accounted for what was encumbered in last year's budget? Wouldn't we have accounted for that when we balanced the budget in the first place?
I mean, the only way that it's accounted for is that you don't spend it and it stays in your cash reserve. So if you look at it that way, then okay, you were planning on spending 213,000 this last year and you didn't, so you're gonna spend it this year. As far as the other expenses,
That was it.
you have your
Okay.
That would have been, the mowing tractor, we carried that money over for the mowing tractor.
Yeah.
And we still haven't received it yet. So that would be a number, would be for that tractor.
so should our cash balance been in there, been another 213 higher?
Well, your cash balance was 213 higher at the end of 24 than it would have been if you spent it. If you're.
What was encumbered?
You're gonna spend it this year, plus your book budget, plus everything else, even if you have, we got your insurance check in here.
Okay, so-
32,000, I think, David Lee, I think that's insurance check. Is that not the right number?
How much?
282,000?
For 25?
Yeah.
I show about 258, but I think
Okay,
there's
so
one.
maybe that's under 30,000. Okay, wait a minute, let me see here. 25.
See, we're just having a hard time swallowing how we balanced the budget last year. And this year it tells us we had a negative $748,000 cash. That's what it really comes down to. How can that be?
If we didn't get more aid.
I mean, if it's $50,000, I can't even figure it out. $748,000?
What?
Because we haven't even paid for the lawnmower.
And we haven't even paid for the tractor that was encumbered. That's, in theory, still in there.
So we don't have money for that,
Well, that's what I'm saying.
For trust.
or the trap.
It doesn't make any sense.
Now, if we go back to 24, so if this money was encumbered and rolled into 25, our 24 beginning cash balance was basically $1 million. We received $2.5 million. We spent $2.6 million, and our cash balance was again about $1 million. And this is the actuals. So if we encumbered $300,000 worth of that and rolled it into next year, I would expect that to be $1.3 million.
No, because you're gonna spend that. When you encumber, you plan to spend. Encumbering is saying, I didn't spend it last year, but I'm gonna spend it this year.
Right.
So it's adding to your expenses for this year.
But you're
If
But when we budget, we consider all that. I mean, we balanced the budget last year. How could we have spent $748,000 more?
Where did that come from?
That's a huge difference. That's twice what the encumbrance was, over twice.
It's got last year's budget in track.
The actual papers have got the whole.
Brought in almost 2.5, but you spent 2.6 last year. Even though you planned the budget for this year to be balanced, because you added additional appropriations, because you added an encumbrance, you now put that budget out of balance. Because right now, like I said, your budget was submitted at 2.8. Your revenue right now are estimated 2.5. I have to look back and see what I told you last year for revenue, but I don't think it would have been much more than 2.5. I mean, the insurance is kind of outside now.
And all revenue in here for 2025. There's no more revenue coming in 2025.
You got the warehouse coming in next 3 months, you know.
That should be.
You got settlement, the whole settlement coming in.
That's the percentage of it, you really want to know your cash balance, yeah. What's there?
It's going to be overspent this year.
Right.
These are additional appropriations.
That's what she's saying, yeah. Tax fees, we didn't.
I can't imagine that we didn't. Something just doesn't add up.
So where I just asked clarification from Jackie, so I understand here. So the budget for 1176 for this year is 2.8 million. We overspent $750,000, but we still have an operating balance of 7.4% of that. So we didn't actually go in the red on that.
Account, but we would this year. So we would this year.
Yeah, but here's the thing, because ending cash balance. The beginning cash.
Ending cash balances.
On January 1st, 2025 was $1,007,000.
I guess I'd be interested to know how much money we have at this moment remaining at 1176. Can you tell us how much money we have remaining? I don't think I heard that amount.
We
I
got,
think Justin told you yesterday it was a 0.
As of today, local.
we'll get back to you, because I don't know that we need to keep going with the budget.
Yeah, let me know if there's something else, like, if you want me to send you more detail on
It-
what people have.
I will just say, it makes no sense to us how we made massive cuts last year, massive cuts to this account. And this year, we're getting down to the point we can't even have a highway garage. If we're gonna have to cut it another 756,000. I mean, the total budget was 2.5 or 2.8 million. I mean, you're talking about 35% cut to the account. Last year, we probably cut 20%. So over 2 years, we've had to cut that 55%. This doesn't add up. The state's sure not to cut their funding down that much. And we haven't been spending more, we've been spending less. We added money into King County General last year to pay for highway stuff that we couldn't pay for out of that budget. We've never done that before. It doesn't make any sense. That's having our budget over a 2-year period of time. All right, thank you. Thank you. It doesn't make sense. I'm sitting here thinking how much we guys got this budget the last 2 years. And I know the state's reduced their funding, but not 55%.
As of today, there is 1.1 in the highway fund. That's what they emailed.
And how much more revenue do we anticipate by the end of the year? And how often they pay us?
Judge Chief. Our disbursement so far are 1.8. Our, what we thought we were gonna spend is 2.8, and she said we got 1.1 in there.
Which makes sense.
Makes sense. This column right here, these adjustments don't make sense. Because if my total program, and I don't understand some of these, but if they're $20,000 and we only spent $18,000, why do I have these adjustments in here? I don't understand what they give you at that.
Give Justin a call.
Right. I don't understand.
No, that's not even good.
No, I don't understand these adjustments.
Let's call Justin and see.
Because that brought our total appropriations up to this, and if those adjustments were things that we, put additionals in for, I guess I understand, but we haven't had those additions.
Almost every additional we do comes out of some special fund or a grant or from some county general. That's about it. We hardly ever make additionals out of highway because we don't get enough money.
Do you want to talk to Justin Jackson? Brian, call him.
I would call him.
Okay,
Well,
what do you want me to ask you?
well, I'm concerned. This is the sheet that he showed me yesterday, and this just doesn't make sense. This was our beginning appropriations total, which we agreed is correct, $1.8 million, which we agreed on. That was budget. Where did all these adjustments come from to make that $3.5 billion? And we're having disbursements out of a lot of these counties, but we haven't. Okay, so here we've overspent.
And then they're actually,
Here we've overspent.
Well, we asked her what those were and she only come up with.
Here we've underspent.
We got $170 million. We're supposed to go back in there. So here, it's still about 70.
Yeah, that's what it is. It's to the church.
And that would go to the fire, right?
Should be.
Part of it is because of the internal
Yeah.
Jackson County General.
And it didn't get budgeted on money.
She said that we put it on there.
That's what I know. Because you said most everything that's correct.
Yeah, we always do our
And we,
Okay.
Price of
yeah, prices that are all low. And I don't remember doing any of that, probably, but what sounded like what Pat was saying is it's good right in. 1176, why would we do it for that one and not the others?
So the income for the month of August is $158,000.
Is that pretty typical for a month?
Still,
it's usually
the whole month.
It's the sender's monthly birthday
Did you
celebration.
see where French's put his picture on? Did you see where
Yeah, I've
French's
seen
put your
that.
picture? French's put your picture on there last night for happy birthday
Yeah.
on Facebook. Everybody's telling me happy birthday on there.
Really?
Yes.
It's always a good thing when the funeral picture.
I wasn't gonna say that. I wasn't going to.
There's a bunch of people telling me happy birthday.
You go stand in there, tape nation.
No, I didn't know that.
Yeah, I just seen it.
Really? Okay.
I saw him on Fox News.
I
saw him on Fox News.
Yeah, I bet you did.
One of these days on the Smucker's jelly, on every phone.
So,
Put that 120 back in.
so that, but, we haven't had it out here yet where we should.
So it's like, they were last night, they were about it.
And that's what I can
I
tell you.
don't, it looks like last time.
So I know
The scope of those same lines, shut down.
Yeah, a bunch of people are telling
So
you.
like I changed vehicle shares from,
See if I can find it.
500 to 440. And I changed, road equipment from 400 to 340.
But, you know, it's, I know that we already saved $120,000, so we're really.
We're
We
just
didn't
gonna
say anything.
In this part, so in this part, we haven't, I understand what we're saying, it's kind of.
We're saving 120 out of motor vehicle, but we're adding it 120 to county general basically.
Robin Peter.
After we have cut another 20, so out of there.
Yeah, we sort of cut it out, that's yesterday.
We're not going over what they're advertising.
No.
It's right now.
That's why we did that.
Right, yeah, I just want to make sure,
But
I understand it.
technically, we're still gonna be under even more than that, because we haven't done salaries yet. And like, if you ask for a 20% raise, you're not gonna get a 20% raise. Right?
But
If you ask for a 10% raise, you're not gonna get a 10% raise. I mean,
at
so
least their
there's-
budget is higher.
Yeah, and so that will actually create more space, because we haven't calculated it.
Since you mentioned salaries, something we talk about, I believe this personnel. Bell has their guys paying $42,000 a year. He must put it up for full time. Maybe Mark wasn't cheap.
Did he change what the full time?
He's wanting to, but
It's not make it full time, but
There's
it's
a less
less
than
than
20,000
20,000.
Oh, yeah.
She
You know
said
that-
the bilingual,
The poor lady, they only gave her like a $700 raise for being full-time.
Yeah.
Like we took it to 36.
Yeah, yeah. That's why I saw that for you.
Don't give her, if she went full time, she's gonna make another $1,540. Because if you take 52 weeks
Well,
times,
maybe her full time at
It's gonna be-
23,
it's gonna be
4,
36.
quite honestly, wouldn't have been worth it for her.
It was gonna be 30, taking her up to 36,000.
Now it would be taking her up to 36.
that's what I thought we were talking about.
Yeah, so that's gonna add some back in, but comparison, I mean, you realize you take the whole group of employees, the raises they ask for, that's probably $200,000-300,000, I would guess.
well, and looking back, what we tried, last time we were talking, you go through, looking at the county general, what we're trying to cut, as you know, the first additionals at the beginning of the year. And Jason, is like on the clerks, we had that part-time, or we had clerical 15,000, but we haven't spent anything so far.
And all it's gonna roll back into the beginning cash balance.
Okay. But yeah, it was again, it's in the budget in this year.
Yeah,
And, I was asking Jason about that, he said it was for scanning. The recorder's office was using right now, so, and then I thought, she said, Amy was doing that full time at a session, so we don't move that up.
I think it was put in there just in case. It's one of those just in case situations.
Oh, so we
We could slash that.
potentially zero out. And then, you know, for the sheriff's part-time courthouse security, you get 5,000, and hasn't spent anything yet, even though I've seen
Somebody's there.
Albert, you know, we got the full-time, and then Albert is been in and out here and there part-time. So we're talking about it.
Must be getting paid out of the jail or out of the
So
sheriff's
sheriff's
budget.
budget, we can zero out.
Yeah, I don't know why that's in there, to be honest with you. I'm sure we talked about it, so it's right.
Sheriff, Park,
Might have been Hart was there, might have had to be there, because Hart was mostly getting people who were retired, and they don't want to do anything.
then we spend in so far this year, and then you have
I would say we could take that to zero. The thing of it is, we can take stuff like zero, and if the sheriff opens it up, and you think, oh crap, I thought there was money in there, we can always do it additional. So I'd say we'll just take that out. I caught that, because I would have missed it.
You've done raises for employees in the past. Base that on new money, to see how.
It's based upon how far we are away from balancing and what our carryover cash balance is. And so, like, we're gonna have a much bigger carryover cash balance. Like I said, for example, number one, a lot of years, we have to come in here, the budget says we need to cut by 3 million. This year was a little over 1 million, that's like 2 million less than normal. So, I know starting out, we're in pretty decent shape. Even if we have to take a little money out of cash balance, we only put $4 million in miscellaneous income last year. It's actually been, what we say, Patty, 7, something like that. So we got $3 extra million. So there's our $1 million in the hole right there, plus another.
So our cash balance is about what percentage of the total budget, you know? She stayed on 20%.
Well, she wants, the ideal number is 25%. And 15% is kind of the standard that most people like to carry.
It's always good to have above the standard.
Yeah, and well, we also have rainy day fund. So I think we're gonna have enough carryover cash balance, because we didn't budget nearly as much as what we took in this year. That we can take money, put it in a rainy day, probably give the employees a raise, and still carry over a fairly large cash balance.
We had a few years we didn't get.
So,
And you may get, the budget may actually show that we're in negative cash flow. Because we do those other things. We will probably do those as additions, actually, we'll see those as additional. Put some money in rainy day, we'll get the budget balance, and then put the other stuff in like rainy day and stuff, because we're gonna have significant period of cash balance.
so you correct, I know we didn't come in heavy here on employees. The recurring cost, if we do give a percentage raise to the stipend, we're not concerned about that recurring cost.
With the stipend in the past, we've done those because we didn't want the recurring.
Well, I'm not, what I'm asking is we're not concerned about that.
I'm not. One of the things that stipends did was it actually kind of got a little behind the inflation involved a little bit. And we did it because we didn't know we would have the balances to justify the raises the following year. So but the last few years, we've done percentages and kind of got, really, the courthouse got a decent raise last year, but the sheriff's department, the last 2 years, got very good raises. So now, it's kind of time to, even, we're never going to even things out for 24/7. You can't, you know what I mean?
So historically, you don't get the same percentage raises across the board for all kind of employees.
We typically do,
But you
but
kind of
we
made up
haven't in the last couple of years because we couldn't get
for
employees.
some discrepancies.
Yeah, the highway department, we were not competitive.
Yeah, we had
We
another
couldn't
one,
get
we
some
had
of the
to.
CDLs, you know,
Yeah, when CDL, my son's got a CDL and he makes 6-figure income, you can't.
so they tried to help the highway department, they tried to help the jail get employees, so I think we've got that somewhat handled, you're never gonna totally have it handled. For one thing, the convenience of working at the highway department versus traveling across the Midwest, you know.
Yeah.
Yeah,
And there are some people who come home every night and like work there, but at least gotta be competitive.
yeah.
It's hard to turn down 40,000 extra a year.
You can't not have them,
You have to weigh that out.
yeah, so,
Question on retirement raises, so, for example, if you said, okay, it's 2% raise, okay, please, now,
Which would be, by the way, 4% of what state did this year. State didn't give me a raise.
so that's it. No, you know,
Well, they got all our money.
in Bryson, and he was talking about what separation, now, could he say, all right, we're only gonna give employees a 3% raise, and then make that separation of a rank?
yeah.
With that
We'll do
extra
those,
money?
yeah.
Okay, I'm just
Yeah, we
curious
can
how
do
that
If we need to create disparities,
because I understand, you know, what he's saying, and I even came back to it, because when I was a detective, Gunner Swan was the chief deputy, I made more than him, because I would get called out. We were on holidays, we had
there wasn't, so I even tried that some, because I know I took somebody that deals with that, I said, we're separate with actually the deputies. I'm sure that, I understand that separation as far as responsibility goes, and so I was.
Yeah,
It's just like Judge Thomas doesn't want disparity.
which is odd.
Yes.
You know, he doesn't want, he wants them all the
He's the
same.
first judge ever had come in and say, you don't want to increase the budget.
And then we had Judge Pell saying he wants disparity. You know, so it's kind of.
Well, and I do think those are all individual personnel situations.
And you gotta do
Department
it.
wise.
Yeah,
You don't know
that's
what.
why we can't make Michael Meade the
No,
problem.
because he knows what his women are, you know, he knows what's going on in his office.
But if they ask for disparities, I think we need to try to accommodate them if we can, because there are reasons for those.
Right, I think the
People
responsibility.
psychologically, people, that's a big factor of an employment situation. It can purely be a psychological thing. Well, he makes more than me, why should I? You know what I mean? And even though I'm doing more than him, that's not right, and they see that as
And every person I know is back in jail, that even today, even back then, the group thinks the constitution a bunch of, it's a pain in the ass when you try to keep a good one.
And we've had a much better situation the last couple of years because, quite honestly, you take about the last 3 or 4 years, we probably give the jail, and the jailers and the deputies probably a 40% increase.
Oh, God.
It's significant.
Trying to get what I started, 16,000 a year, is the deputy to what it is now. Yeah, and so, but I was sheriff, so I know what pension is, man, here's like a pension, I have to be 27 years, 20 years there, so. Well, I think great times to change things, but more expensive, but.
Well,
But the philosophy of the council in the past is to give ownership to those departments with regard
Yes.
to how they run the departments, what they expect.
that is very much my philosophy. I've always believed that you let your elected officials and your managers
In
operate
those
things,
departments.
and you do the best you can to accommodate. You might disagree with them in some cases, you make your argument. But once when push comes to shove, they're the ones that answer to the voters.
For
Or
years,
they're the ones that answer to whoever their candidates.
they wanted disparity, differences, and we asked for performance reviews. For
Sure.
them to at least do them, to let their employees know, yes, no, I'm doing a good job, I'm not doing a good job, that they would never do
That's
that.
flew like a lead balloon.
They would never do that.
And the thing of it is, we can't force elected officials to do things. They're not gonna do it, and there were some literally said, I'm not gonna do it, I don't want, it's almost like, to me, that's almost like socialism. We will make sure everybody's treated equal and that's not, I believe meritocracy, and I believe in that, if they would do, that we could continue to do it. And the thing is, I've been looking at that and say, we tried, I have tried to say, right, we're not.
It helps out me understanding.
We actually cut the rates in 50% because they
I think when we get the actions done.
didn't make any difference.
Fix it, so.
So the 6 months income average is about 273,880, and the expenses in the 6 months time is 310,283. So they're spending more than what they're bringing in.
How are they spending above or above balance stuff? Can't do that. They don't have the money in there, they can't spend it.
They got their budget, they're spending within their budget, but they're spending more each month. And by the end of the year, they're not gonna have enough to cover their expenses.
So what's good of having a budget? If you're just allowing.
But the thing is, I don't think you guys do that. If your budget, if your line item says you're running out of money, you're coming to us and say, hey, we're running out of money. I don't remember these guys ever going, oh, we're in the hole here.
Our people at the highway department watch the expenses very, very carefully, very carefully. And I would hope that's what you found out there.
Right, well, that's like right now, we're out of rock, man. We're not getting any rock right now. That's why we're out, I want to do this right now. We're out of rock, man. Yeah, nothing getting through here, we got to stop.
Yeah.
usually the first 6 months they spend, and then they find out toward the end of the year, they're gonna be out of money on certain line items.
You have line items you're out of money right now besides rock?
Right.
You have line items you're out of money, you're spending the money out.
Repairs are very low, repairs
I
are
would
very low.
imagine repairs, yeah.
But we might be at zero on that, I'm not sure.
I think it was what Justin said.
Yes. And that's what we talked about yesterday, the repairs are eating us up at the present time.
But he just doesn't go, okay, we're out of money, we're gonna go do it anyway.
No, absolutely not.
And that's what, basically what you're saying, is they're spending more than their bank. How can they be?
If you will check the last number of years, we always have a surplus at the end.
Right.
We always have a surplus, you can check that out there.
And that doesn't make any sense.
That's no longer the case, but we always have a surplus.
Just forgot about.
We don't typically do them in that account because they get a limited amount of income, and that is not taxpayer, that's all gas tax and all that. We can't control the income on that. And we very seldom ever get anything out of county general. Last year's the first year we ever did it in 22 years on accounts.
Okay. So what the script that we're seeing, the fake utility and whatnot, was all the encumbered things from last year. But they didn't, they encumbered it, they put it in here in the adjustment, which inflated their budget for 2025. Okay, but they still took it out of their beginning balance. So they took it out of their beginning balance like it was already spent, and then they put it in their budget over here. So the beginning balance went down by that amount, and they upped the budget. Realistically, the beginning balance should have been higher.
That's,
So the beginning balance going in should have been another 693, well, not really, because we had, the building came out of the wrong fund. The building should have came out of 1138, it came out of 1176 for $130,000.
which I knew that was probably part
But
of
the
it.
road equipment here for $274,000 was actually encumbered. Okay, so we had a $270,000 budget for 25 for road equipment, which we haven't spent yet. We encumbered $274,000 last year. We had the invoice for the tractor, okay, and the money's there. However, that money, they took it out of our beginning balance, or our ending balance, because we said we encumbered it, but it didn't roll into next year's. Okay, so we spent it twice. According to their math. So the encumbrances are screwing us up. I mean, Baker Tilly's not taking those in. Our ending balance and the encumbrances aren't coming out of us.
That is exactly what I've been trying to say the whole time. I don't think they're actually, I mean, yeah, they take them out of the cash balance, but they're also taking them out of the ending balance. They're doubling it.
Right.
You can't do both.
Because you're on top of it, when you have that check outstanding. you
Yeah. Yeah.
Subtract it.
Oh, you're not gonna cash that check.
Right, then add it back in.
Famous last word. Might be a side to
I got owners that look at their accounts, and, oh, I can write a check, that's okay, but I've been writing checks to Kroger and Walmart and everywhere.
I know people who literally thought those had checks that money.
Well, I'd like you to look at the ATM balance.
So that's what's got your beginning balance all screwed up, and that's what messed up your beginning balance for 20, that's what messes up your 25 budget. Okay, we still gotta fix the 26 budget.
So we need to address that $130,000 that should have been,
Capital.
the county.
Yeah, that needs to go to cap.
They'll have to do an additional. It's not in their current budget, is it?
I don't know what it is, but it's,
Look, it was 140. Should have been
149.
And now it's kind of like you with capital development, has nothing to do with 1176.
So it adds another $140,000 back to 1176.
So they'll have to do a
well,
transfer.
it should add to our ending balance.
Right.
Okay, what we're trying to figure out is why is 2025 so screwed up? And we really didn't spend, we're not gonna spend the now it's 3.2 million. We're not gonna spend the 3.2 million, we're gonna spend the 2.7 million. And our ending balance should be higher than what it is, but when we go to 2026, which is the budget we're working on now, we still have a shortfall in there that we haven't fixed.
So the building, Patty,
So the building repairs, they have asked for in their budget for 25 is 30,000.
That's building repairs, that's not good, that building.
Well, it's already there. That 30,000 there, so they'll be encumbered that 30,000. It's been that we spent that.
Okay, that's what that is, and then,
That was gonna be the electrical in this new building. What I got was just a straight building and the foundation and engineering state release.
but if it was put into 1136, and it needs to go out, or it needs to go out. Right? Or it needs to go.
I don't see it in 1176. I don't see it.
you've got building improves and repairs, 45 and 17, you've got 10,000. Insurance, building and structure. North building is
Yeah,
what,
36 one time.
yeah, 130,495. And I've asked for additionals for that.
Well, the 30,000, it should be in 1138. You can cap funds, what I was showing on.
Yes, it's in the 30,000 for 138. They're saying that the 130,495 for that storage building should have come out of the 1138, not
Yes.
1175.
Yes,
Right.
But that's not what you asked and that's not what you gave me. So if you want that coming out of the 1138, you will have to ask for additional. And then a reduction in the storage building for the 1176 to take it out. So that's what you want.
because it's coming out of Cuban County well,
Right.
and it did in the beginning, we did.
Right.
We just need to get that in the right budget, that will help on that. That's going to be that,
130,000.
that's going to be expensive for 25.
That helps when you're 25 being balanced, or you're 26 being balanced.
Right.
That doesn't, the problem is,
Those encumbrances.
well, the encumbrances and the building and everything else screw up our beginning balance. But our beginning balance is not in the red. And we budgeted $3.2 million for 26, and we're only getting $2.5 million. So we've got to reduce 1176 for 26 by, we've already taken some out of there, but basically got to reduce it $700,000. And what we're saying is, I mean, just so it balances. We're not talking about your beginning balance or your ending balance, we're talking about, we got 25 popsicles coming in, and we got 32 popsicles going out, and we gotta get it down to 25 popsicles. Because the ending balances and everything else are gonna straighten themselves out.
So like moving forward, like insurance money coming in, should we put that in the green cap fund to eliminate the 1176 problem?
I would,
Yeah. So then,
Like, you know, we don't know that's coming, you know?
Actually, we typically put all insurance money in general.
No, the insurance for the highway would go into the insurance money,
Because like the sheriff's department always goes into general, and then we give it back to them.
It depends on what the building is. it's the highway, goes into the insurance line item as income, and it goes out of the repairs to wash it out.
Okay, so we showed that that money did go in, it wasn't.
It goes in and it comes back out, yes,
But we showed that it did go in.
yes.
What day?
The insurance,
Yeah. That's this year, right?
all insurance.
And then also you said you sold some equipment.
Then we had a truck burn up too, so we'll have that truck insurance money.
Okay. So that,
goes
have
into
you
the
got that
highway.
yet?
Yeah, I think we have those insurance money.
So that should be also, and then you sold some truck, some equipment.
The soda truck goes into miscellaneous, the insurance goes into the insurance reimbursement. The insurance is $258,623.76. And went into the repairs of the highway. Justin told me to put it in, what line item?
And it was on the truck alone.
That was, there was like 2 or 3 trucks.
Yes.
Justin told me to put it in the repair.
Right.
Jason, I'm not following you when you say we have to cut 707,000.
Okay,
Because what I'm showing for 2026, estimated ending cash balance is minus 487,000. So to me, that's what we need to cut, is 487,000.
that will spin your account down to zero,
Yeah,
yes.
that's correct.
I guess I'm looking at the next column over column E, which is your net cash flow.
Right.
And
Which doesn't really pertain to the budget as such. That's how much.
Yeah, because
I thought it was overspending.
Let's get the balance down to zero from the estimated ending cash December 31st, 2026. So we need to cut $487,320, which makes it zero. And we need to probably cut a little bit more than that.
Okay, we've already cut $120,000 out of there.
Okay, now let's go back to something else here that Patty gave us, this revised. On the revised, she is showing that we only need to cut 224,000.
That's, we cut from last night, right?
Does that include the 120,000 or some of the things you've taken out?
No.
No. The 120 came out this morning of what?
So
Judge,
basically, what you're saying, for the work we did last night, we're short 224,000. We've already taken 120,000 out, so we need to cut another 104,000. Is that correct?
If you're gonna run it down to a zero balance.
And yes, that's correct, but we need to cut a little bit more than that, a little bit of a balance. I don't, 0 isn't good,
Well, yeah, I mean, we're supposed to maintain 15%,
which we can't do,
okay?
Yeah.
as long as we have a little bit of a balance. Because, I mean, what good is a balance going to do us? That's not repairing any roads, that's not repairing any equipment. We need to use, I'm sorry, every penny we can get, but we can't overspend,
Well, that's why we've been giving money out of county general.
Exactly.
So we kind of use county general for cash balance, quite honestly. Yeah. Because we can always cover out of that. I agree with what you're saying.
So we
just need enough buffer
according to
in there
this,
so
we
that
need
you
to
got
cut another
another
104,000 out. So I'm suggesting that we cut at least another 150. That'd give us a balance then of about 50,000.
So where do we want to cut it? Now, what we could do is we could just go in there and say, whatever it is, we'll just take it out and then you can come back.
Yeah, I don't think it makes much.
I actually think these numbers are going to self-repair.
If you want to, I take it out of road equipment, we've got 400,000 there, I take it out of road equipment, then if you're saying we can come back and ask for
So
additional.
we're going to probably get your road equipment money out in general, because that's the main time anyway.
Well, we put $60,000 in general already for road equipment.
Right.
Correct.
So you got some in there.
Yes.
I mean, we got road equipment down to 340 right now. So if we drop that down to $200,000. Then you come back and say, hey, I bought another truck, or I need to buy another truck, come back and get it.
So if we took that to 200 and vehicle repair to 400, that would be enough.
Now, say that again, Larry?
If we took the road equipment to 200,000 and the vehicle repair to 400,000, that should cover it.
Well, we've already cut it. 60.
Yeah, so the vehicle repair should only go down to 440.
Well, that's what I added, because we put 60,000 in their account, so it
That's
really
what I
wasn't
had, 440.
But I'm saying cut it another 40, that way we've taken out 180, got a little bit of account cash balance.
That gives almost $100,000 cash balance.
Yeah.
Which
You want
is
to, well, we can and put 420 in there, cut it to 40,000 instead of,
Okay,
so then there, you've got like an $80,000. Does that make sense?
Yeah.
So we got vehicle repair at 420 and road equipment at 200.
yes.
And you think Jason knows beginning balances and stuff with the state justice?
We've been getting balances have to adjust themselves, and once we move this building out where it belongs and figure out, I mean, we had $274,000 in there in the truck we paid for last year. It's showing disbursement this year. I mean, it's,
Yeah.
take those two line items, gonna add $500.
They double themselves, because that's 500 grand. basically.
500 grand,
That's
and
right there.
Or
That's the big one.
or you said a vehicle repair is only 420,000. What was
Yes.
that one?
The road equipment, 200,000.
I mean, I agree with your guys that if we get newer equipment in there, the repair is gonna get down.
Yes.
And the repair are just killing us.
The cost of parts anymore, as you well know, it's escalated. I'm sorry.
And you still have equipment.
Yes, that's correct. And some of the old equipment, honestly, needs to go. It really does, because it's,
I need to send my nephew down, Guppy.
So what about these other ones that are negative?
That fixes everything.
I think that's it.
I mean, we got some negative cash flow and some, but
Yeah, see,
That's all
I'll,
right, yeah.
yeah, all as far as our ending balances and everything else we fixed them.
She needs to run it so we can see.
no, we haven't fixed them all. Local road and street, unfortunately, we're in a rate of $7,800.
But she hasn't put in what we've taken out, right? Yes, no. Okay, so it's even still have some that.
The way I see it, I thought we're short in local road and street.
So you still got some.
Am I correct?
I thought we fixed it.
I
Yeah.
thought we did too.
That was down to 499,000.
Yes.
We changed it to 499.
Okay, then we're okay. I didn't know if we made that change or not.
Yeah, I think we fixed all the other
Okay,
problems.
I have it in my book here at 499.
Yes.
And that's what your receipts are, 499,000.
All this should be.
Okay, now let me ask you, what do you have down for, Hume Bridge?
One second. Q Bridge, I have. We didn't change.
The bridge work, you took it from 450,000 to 301,000.
I have 301,000.
301.
Yes,
I know we did that, but I didn't put it in.
which is devastating.
Total budget for Q Bridge is 326.
Yes.
We have 25 bridge inspection and 301.
So I think that brings us up to date.
We verified the ARPA money again for the roads, for the kind of highway, with most of the gravel and stuff last year.
Okay.
So it did go up there was open.
Can you tell me how much if you lower
We lost.
We haven't done the other $6 million.
Okay, we haven't done it, 1170.
That should be there. Influence management.
1170.
Yes.
Well, I appreciate all of your time and effort you spent on this. This was a nightmare, I understand. And when I looked at that airspeed 3.5, I saw 3.5, I just didn't understand how that could be.
I think that's an accounting mistake.
Three o'clock.
It's actually 3.2 today.
We did that. Shoot that video. Just like we did. Yeah, take places.
Yeah.
I can do it September 2nd, 3 o'clock.
Oh, second, that's.
September 2nd.
Okay.
Probably help us get on our day.
It's that.
Okay, yes, I believe I can do that all.
Yeah, it was in both places, and we took it out of public safety.
Right, 73,820.
Right.
So we should be all right then on that one.
Yes.
Okay, now, the next two things we got addressed is, what we're gonna give raises, and also I noticed the sheriff was one of that, we did a contract, right? That's what we're referencing. But we're not gonna go that high, that's for sure, we gotta talk about it. You know, the thing of it is, I mean, I understand with the current ICE situation and all that, he's got a lot more work to do. And I don't have a problem with that disparity. The state didn't give a raise. So the state didn't give a raise to the prosecutor, which means the sheriff didn't give one. Okay, judges didn't get raises, the prosecutor didn't get raises, the sheriff didn't get a raise. The sheriff is wanting a raise, we don't, none of the other people have mentioned it or asked for it, and we wouldn't do it anyway because it's kind of outside of it. So this is a totally separate thing, and it's only quite honestly because of ICE, the ICE program that I would even really even consider. Because this is a changes the whole dynamic of it, because now we're setting a precedent that's different.
And because there's either you take percentage of what the prosecutor makes, plus
60% of the prosecutor.
plus then you get the tax notes, which is latter is going to get the tax notes back to the county. But those are hit and miss things. I know, I would rather see, okay, not even do the contract, say, all right. Because some counties take that tax money, run it through the auditor's office, and then it's added to the sheriff's salary, a month, so he's already, then he gets taxed on it. So, I say, all right, let's do it. Because the way I turned into it from Carter, and Carter did it, is that it was considered a separate business as the way they did it, say, okay, you're responsible for X amount of dollars of taxes.
It's like 1099
from the state. And so if you're on the full debt, and we're down tax for 20 years, so okay, you know what, you can still run it through here, but there's your raise. I mean, he's trying to, the tax force right now saying, okay, I average 20,000 a year, I'll give that to the county, just give me this contract raise. One of them is run, whatever tax force you have is flat over. To the county.
And do it as a W-2 instead of a 1099.
Yeah. Well, we got accountability, he's got accountability, supervisor has accountability, as far as, hey, you collect this much money.
It would have to go through payroll.
Yeah, that would go through there. And I know there's other counties that do that, we haven't done that here.
Right.
But we have to get other auditors in and do that, as a possibility, that's just a suggestion.
So how fluid does that run from year to year then?
It varies. We're nothing like Marion County. Marion County at one time, he had a before they changed those, a team that went out and collected tax returns, he was making over nearly $500,000 in collecting tax returns.
Mary Kay Sheriff, their full period of time, they were well over $1 million.
Yeah. So that's when they come in and kind of adjusted some of that with, okay, you're only gonna make X amount of dollars based on the population of your county, and you can't make more than certain official. I have to agree, it's been so long, I've had to deal with this since 2014. But in that aspect, it's like, in your future count. So Marion County Sheriff, based on this population, is making more than Clay County. It's all, so our Pike County makes more than Clay County, just based on the population, is the percentage of what the prosecutor makes. The prosecutor makes the percentage of the judge.
So he's getting that money now, correct?
Yeah, we're paying it, yes. Oh, the tax warrants?
Yeah.
Yeah, he's getting the tax warrants, yeah. Yeah, he's getting 1099. And it's credit, it is a pain in the ass when you have to go in and start itemizing everything for tax purposes and deductions. So I understand that.
Well, someone who is 1099 self-employed person, I mean, it is a pain, that's part of it.
Yeah. And that's
And you pay your own self-employment tax, which is 15.4% of the admin areas. So if you take my tax rate and add 15.4, that's what it is.
So that,
Employee,
if
it's,
you did it as a 1099, you're still gonna take taxes out.
he's responsible for paying the tax and all that. It's not really yes, it's in the keep track of everything. That's what I sponsor a lot of teams of the Y and then basketball team, soccer team, just as a deduction because you got to spend part of that. You're going to pay taxes anything. So other than running that through, he doesn't worry about it's less of a headache. If that's something.
the thing of it is, so, it's just people, if I remember, it was 27.
Well, I
can't remember, but if we did that, we wouldn't have to go near that high anyway, because we would also be matching FICA on it, go into this pension, all those things, which is gonna raise those factors. And so, it's gonna cost us to do that, more than what we'd be getting in on. And $20,000 worth of supplemental income, if we gave him a $10,000 raise, that's actually probably about the same. Because of taxes and all the matching money and all that stuff.
But you also have for the government for commander.
Yeah, that, I don't have a really big issue doing that, because if you add those all up, there's only like 4 of them. It's not a significant amount, I thought.
Lieutenant.
And you always ask for more than what we're going to get them, so we just take it all.
Yeah, the patrol side of it was lieutenant, 2 road sergeants, chief deputy, and detective. It was one lieutenant, 2 sergeants. I don't know, I didn't look at the
Maybe
jails.
like 6 or 7.
As far as the jail is concerned, as far as their separation, I moved out of Leverage. He was,
Yeah, that was wrong.
So, he obviously would have to agree to this. If we were going to keep the tax warrant money, he would have to hurt us somehow. Like, I don't know about
well, I
that.
suppose have to see what other county, how other counties do it.
Yeah.
Whether it's through ordinance, yeah, or check and see where accounts, how other counties do it, say, right, if we do this, how do we do it?
So he's.
So what I think we ought to do is say, Bryson, look, we're not gonna leave your salary the way it is right now. We don't have time to work through this in the budget process, let's figure this out. And if you're gonna give us those tax rules, we'll give you whatever that is, to make it fair. From his standpoint, it is a pain to have to do the tax accounting on that, for $20,000, I think. And we're also going to be matching his FICA, that he would have to do on his own for self-employment income. Just go for less than what those tax numbers are to make it even. We should just give him that salary, it'd be easier from our side, and all that time, just kind of us. See what I'm saying?
No, yeah, no, but you still have to say, hey,
But he's gotta agree to what his number is there, and if he doesn't wanna do it, we just go back to what the salary is.
Don't agree.
And that's kind of what he proposed anyway.
Yeah.
He wanted to raise if he gives us those tax.
And the raise was basically the amount of tax was actually extra, I kind of read that based on, and you just don't know.
You just don't do it.
He would get the full amount of that or percentage of that?
But
He would get the full amount of that or percentage of that, the tax bonus?
Full amount is what he's
it would
asking.
be what it is, it's a state generated thing in Department of Revenue. It comes down to each sheriff of the county, businesses and individuals within the county, those taxes and back taxes that have to be collected or they have to pay. And so whatever he collects he gets 10%.
He goes and serves them and then collects it as well.
Basically, you send out a letter and that to them, and then they set up a payment plan, you go to the sheriff's office and pay it. Now, if not, you can go out, the sheriff, go out and seize bank accounts and assets based on what the state has come down to shut businesses down and put letters on there because they owe taxes. I had to go down, Judge Akers, and pick up a couple from their house, their business, on tax warrants, and bring them before the judge in the city. And names.
Wasn't yes. Just to clarify, it wasn't my wife.
Yeah.
What about the ones that, and this is just curiosity, we collect, title companies collect a lot of tax warrants. Okay, because we were refinancing or selling your house,
Right.
all that attaches and
You don't
we
get
collect.
it.
Yeah, what's the deal?
Say, hey, look at your state.
Because I mean, we collect a lot.
So the sheriff gets to keep 10% of that.
The state pays 10%. He still sends all the money in. It's
He reimburses.
Yeah, okay.
Title companies in the state of Indiana probably collect more than any sheriff does.
You used to have your lobbyists, but anyway.
That's what I was like, I
You
didn't
gotta
know
like
that.
it out too.
So, Mike, just clarify, I'm trying to figure all this out. So the sheriff does this personally, or is this responsibility he can give the deputies to do, and they keep a percentage?
No, the deputies can't do it.
It's on the sheriff.
Yeah, under state statutes, the sheriff, he's the one that sends letters out, he's the one, I think, in my
He
time.
can take backup, obviously.
I had, 3 words that shut business down, I went and collected everything from gears, jewelry, and then I paid taxes, about 340, Carter had to do it in the business up north, and a court order, the seats, equipment, and somebody's father bailed them out, so I had to seize one bank account,
Wow.
it's, the state doesn't mess around.
I
Yeah,
just,
maybe we're funded like I do.
Yeah,
I just say, like, you owe this on your person.
Andy Griffith had to do it,
I do. Watch that episode the other night.
In the end. No, Paul, it gets better. So we really need more time to figure that out, the pricing.
I think we did.
I mean, we got to the end of the year, you're not gonna get a raise from January first anyway.
Yeah, I think that's something we need to sit and just.
I think we just wanna make it as simple as possible.
Well, I think very simple, and you could say, look, okay, let's see what other counties do, how they do it with their tax notes that are, get that information before us as opposed to just saying, okay, we're gonna do it, we do it. I mean, obviously, as I say, we right now, it's new, but the counties done been salary ordinances throughout the year, beginning of the year, we always do that. January, once we figure something out, if, depending on what is decided, but.
What I think we should do is go ahead and get the budget balance, leave Bryson's amount is what the legislative month amount is, equal what, because it's the same, it's gonna be the same as last year. And then have a discussion with him and right up front say, this is not meaning we're not gonna do anything, we need to time the budget, we'll figure, we need to talk about this, work it out. Because if it can benefit him, make it simple for us, give him, to manage the number of beds he's managing in the jail and stuff, and doing all that stuff, we are not a typical county our size. we're a county 3 times our size when you look at the number of bids we have. And that is half, probably more than half of his job.
Well, that's, yeah, but you
Yes.
need more time.
Yeah, but we need more time to be able to figure it out.
But he's also hiring more help. Not just, he's also hiring more help.
Well, he's got all the other needs now,
But
but
it's
yeah,
evolving
but that,
more.
yeah, and that is a pain. I mean,
Yes.
any manager, you go to business, you can help. I mean, employing a business would be great, if you have to have employees.
And
You
even
got employees, it's a pain.
14 beds in this proposed state, you don't need another employee for that bed.
Right. Yeah, by the way, if you did 327, that's a good situation too, so. Anyway, so let's make sure we understand we're not blowing him off. We need to figure it out, and we'll just leave it in the budget as what his current salary is. And then we just need to figure out, okay, what are we gonna do on about the gaps he's wanting to create, and then what we want to do with employees, and figure out where we're at. If we still show that we have a negative, we can actually go into our cash balance if we need to. Because it's gonna be significantly more than we projected.
So she needs to run the numbers and give us final numbers, or
What do you want to do with the sheriff pension and the additional pension that he's talking about?
oh, down there at 1501.
Because for the report, the amount that we always done was the 342,706 versus the 362,139 that he's got. And then we usually don't do the additional 19,000 either.
I don't do, the matching 457 would be,
The 457 is the 342,706.
they'll get the regular pension through. 457 would be, who's on that?
That's an
That was at
additional,
19,000.
now that's a whole additional. Yeah, that's a whole new plan. It's like adding a 401k plan to the,
And I understand the process of matching this other, but I'm thinking, okay, if we're giving you a raise, use that, we need to know what you're going to retire. And that one, yeah, so if we're giving you a raise, and if your level of thinking means you have to take that raise, and you've got extra before you set it yourself as opposed to that's matching. I understand it's an incentive, but I don't think it's going to be that great because each individual is going to be different.
so 457 is kind of a little educational thing here, since it's kind of my opinion, but 457s are typically used in nonprofit organizations. You don't see a lot of them, well, they are, I don't even know what the rules are, I've never seen one in a private.
Are they similar to 403Bs?
Well, yes, so most people will have a 403B that they do matching into 403Bs. They have a 457 traditionally does not match. That's very unusual to have a 457 that matches. The biggest place I see 457s is with doctors. They have them in hospitals and clinics, places like that. Because doctors make so much money, they want to be able to defer more money. They defer more money than 457, but they don't match them. So they don't typically also have a pension plan like sheriff department does.
So let's just say no to that.
Well, I mean, he must have a 457,
That's his,
that's their business. I don't think we should match it.
No,
I
it's
think
not.
the 19,000 needs to be.
If we can offer it to the sheriff's department, we're gonna do anything with it, we've got to offer it to all counties.
Do we do any, is there like a 403B for the county at all? There's nothing, so the
Oh,
only
it's got per,
Yeah, they got-
yeah, person, different animal.
right.
That's pension.
So you do not have,
I thought there would be somewhere else that it's the employees who enrolled in. Themselves.
what?
Well, John Tester was talking about something that we see.
Honestly,
That's
most
okay.
county employees do not make, six-figure income where they wouldn't be able to qualify for an IRA. They want to set aside additional money and set up their own IRAs. Well, quite honestly, I really recommend Roth IRAs. You never pay taxes on that again. Maybe not for an older person who's ready to retire today, but I got older people that convert their 401ks and their IRAs Roths all the time now.
We just don't think we should,
Yeah, I don't think. if they wanna do an IRA, that's their business. And, there's only a few, unless their wives make a lot of money or their husbands make a lot of money, I don't know why, quite honestly, even the deal for 57, it's gonna be an expense to actually set the plan up, they have plan fees.
Yeah, they already got,
Oh, they already have a
it
457.
is already 457, that was established a long time ago.
They don't,
And
I don't wanna match it.
Who's the plan administrator there, you know?
it's still through their pension company,
Which is,
and that,
used to be Smith Power.
yeah, they changed, I can't even tell you they changed to since, Stan Morgan was out. But the actuator is still. Let's see, we can't really find it. We had a check from direct deposit every month from.
Typically though, if you got a good pension plan, we're not gonna match. Now, there's exceptions. I mean, if you got an industry where you just flat out can't beat people over, we can raise their salaries, try to do that.
I just don't think we should do the 19,000.
I don't wanna do that.
$19,000.
And then just do the minimum on the sheriff pension like we've done in the past. Because I think he's included that 19,000 in the 362,000.
Yeah. We've always, it is not unusual for us to have to put more money in sheriff's pension.
But you guys just added that.
He added that in, I made a separate line item to make sure that
Okay,
you
no,
know the difference, so.
What it says per report is 342,000,
that's what the actuary tells us.
That's the amount that we normally do.
and as long as it's funded, it was, I know for many years,
Yeah, it wasn't that.
it wasn't funded correctly, and I didn't catch, I got that.
I remember that.
Yeah, I do too.
So,
We're gonna put that in.
As long as the actuaries can stay on top of their game, that should be okay.
We're gonna put that in 342,000.
706, yeah.
Okay.
And
But we kinda have to on that, that's to keep them.
and then you put his wage down to 110 instead of the 137.
Okay.
now, let me ask this, I don't know the answer. Okay, is the 362, 149 based on if raises were given?
That's according
Because it would
to,
be then the 3%.
that's the report that they, from the,
From the
that they give me that
That you
For
have,
them to have.
yeah, but that wasn't including raises as such.
they give us a number to put in.
Okay, yeah,
They probably, my guess is they probably always do that in arrears.
So.
Yeah.
So I didn't know if that's what he had done there, so.
No, I get the same report he
The guy that
does.
sits next to me at IU games is an actuary, I'll ask him to do that. He's actually the actuary for the state of Ohio. He's the department manager.
What you were asking, was that built into the raising adjustment?
Oh, that's what I was wondering, if that's how you figured that.
I would think that number would come to from the actuary.
That's what she said.
322. Yeah, that had,
Yeah.
an action.
Yeah, this is for.
Those guys are really exciting people most of the time.
What?
Sit in the basement.
Do you want to do anything with part-time?
The what?
The part-time courthouse security? Take that out of there, I would imagine.
You
Is that
know,
what we said?
it hasn't been used.
Yeah, I like to figure out where it was getting me.
I think he's just sending people over from the department and they're paid for
Right,
it.
properly out.
So we're
It's
serious.
over a lot.
Yeah.
Is Albert still working for the sheriff department?
Yeah.
He's on the community correction. I'd like to get him over time.
Anything else, Patty, you think we need to?
On the clerk, on the clerical, that was a part-time, that was gonna be scanning.
For who?
In the clerk, the 001, so she was, it was there.
Talk about the one for the clerk.
Yeah, it was going to be a part-time for scanning, but the recorder's got their scanner, I've got my scanning, and so the clerk doesn't need it because, she made me work out that maybe it's a full-time scanner, and they're taking it out of the special graduation. Yeah.
I thought the, I thought clerk was gonna start using the word in, or have.
No, that means the clerk's preparation to pay the. One time we was on going to reach there,
Change
but that went out the door.
Yeah, that wasn't gonna work.
the costs of the law.
Yes.
The 15,000, yes.
What was it?
That would have been the clerk.
Instead of that. Clerical, 15,000, they haven't used it the last 2 years.
My attitude is to take some that haven't been used, unless we know there's a
Yeah,
concession.
every other year.
Take it out.
Take that out.
What did we decide about the other request that Bryson has for the other people?
The business disparities, yeah, we need to address that. I have no issue with doing that.
Well, and the judge wants his all evened out, but
We kind of did that when he was here.
so they're gonna reduce.
Typically go page by page, or you just kind of go,
A lot of times when we get done, Patty actually goes through, does all the numbers. And it gives us, because hers is one that matters, because we can all have that.
Well, it's like the
And
clerk,
then,
like the clerk, she's wanting a 16% raise for her deputies.
yeah, that's not gonna happen. So,
I know they work hard, but they apply for that job.
I mean, they, yeah,
Right there, that's-
I think we all have, I think it is, set that on her, the two chief deputies.
Yeah, it's just for two first deputies. I mean,
And you might be able, and I think she also went there for a disparity.
she did, but
It's just scary the other day, Harry, that, we could make this a 2-year deal in separation between.
Yeah,
you would have to.
Yeah, I don't think we can, we don't want this, or it all in 1 year.
That'd be,
And I think they need to understand that. You're asking for us to, in 1 year, probably separate it out. They just need to come next year, remind us, that's what we said.
well, the thing about it, we can't fix it instantly.
Right.
We believe that the sheriff's pension funds, we have budgeted for report, because we had an additional person. And,
They have taken that on to consideration,
uh,
and we usually go by the report that they,
You got
the
that report,
pension.
you got that report, we
Yes, I
see
do.
it. Okay, let's, if you can grab that, then that'll clarify, please. Thank you.
Is this the right one that they tell us to bring for now?
Yeah, so I'm familiar with that report. So I know they fill out how many full-time there that needs. Or how long they've been there.
Here's the report.
So the clerical, that's 114 clerk for pay. So, and then she got. Okay, so
So what are you looking for?
here's what I'm thinking about on raises. So based upon inflation numbers last year, going into this year, I think inflation finished 2024 at around 3.7% clip, something like that, which is higher than normal. And so what I'm thinking is if we did 4%, we would be able to offset that. And it'd be just a little bit of 4%. So I'm thinking between 3 and 4, really looking through the wires of that. That's a pretty good raise when the state gives 0. I mean, I'm not saying we have to do what they do, but it's, you know, that's an indicator of the state.
So how does
It's
that,
being pretty generous if we gave them 4% raise.
how does that then impact new money we receive plus our reserves or cash balance?
We're gonna have more than enough cash balance offsetting anything new. Like, considerable amount.
So that's on that. If we go back to the service board, which was, we changed everything back to give 4%, but then when you get down to the fourth quarter, he actually took a pay cut on that.
That's what he wanted.
Increase up the other one considerably.
Yeah, and so what we did was we talked about why don't we split that difference this year, and then maybe he wants to even them out. Right? And so this year, we still have the disparity, but next year, you even it out. But we just give one of them. So last year, before bailiff was 41,226, we had put both of them at 44. He wanted to put both of them at 44,977.
Right.
So what is 41,226 plus a 4% raise?
So the, yeah. But he's got the Guardian, Casa Guardian, whatever.
We don't,
Is that right?
yeah, he's not including her in that even in that. He's just including,
Oh, I see what you're saying.
yeah,
It's the deputy bailiff and sub CRT reporter and that county report.
he wants them all evened up.
So the highest paid was last year's paid 41,226.
No, the 45.
Yeah, the adopted budget for.
He wants to even all three of those.
Yes, he
Not
wants
two, it's three.
all three is what he wanted evened up.
So did you show this, Patty?
No, that came from Patty.
Oh, okay, so on the, this is on the sheriff's budget, the amount we put in for pension this year is 342,706. Right, and that's what's in there, right?
That's the minimal for a 15 year. So 20 year. It's minimal funding. Minimal, I see.
So what's your question?
So what do you
No,
guys?
I'm just saying that's what. So that's those three numbers.
Okay, because Patty thought the 19,000 might have been the 19,000, and that's what matching with that. All right, so go back to this. So the highest paid was actually 45,088.
Right, he has her getting a pay cut. And he's okay with that, he said.
And
Well,
that,
it doesn't, that's his problem. I mean, truly, guys.
well, the thing of it is, what he said was, and he is right, but he should have thought about this actually when he did the hire. That was actually what was
Martin.
What? Marley was the one who's getting paid that, she's not there. So when he hired this new person, he really should have put him down where he wanted to.
And he probably did,
No, we didn't, we asked him.
but you haven't gotten it all years.
Yeah. Exactly, so in that case, it's 41,226 plus a raise. It's what she should probably be paying, right?
So the 44,977 ends up to be an hourly rate of 24,632.
But how much of a percentage?
And
Well, I'm just going back and figuring what if we put 4% on a 41,226.
the court report currently is getting 24,77.
42,875 where?
42,875.
875.
For the other two. And you leave her alone because you're not gonna reduce her pay that much.
Please don't give her a raise.
Well,
Can't reduce somebody.
I know, we talked about that, but again, the problem,
I know we did, but that,
what I'm thinking
he
is,
was thinking if we got 44.97, she's only losing $100.
I would call that shooting yourself, but
well, the thing of it is, if we give a 4% raise next year, you're still not to 45,000. I mean, that's what's the odds we get a 4% raise every year. It's hopefully not that high.
But I just think I don't see a problem cutting her, but that's a lot.
So if you're saying, let's leave that 45, whatever, the same, and then raise the others up, well, she's just not gonna get raised for several
Forever.
years, basically. Well, until
That's
it's
what it's only trying to make it even, so the other two catch up with her.
So in
It is
this,
what it is.
so Patty, when you do raises, this is gonna be an exception. So the
Quarter.
quarter is not gonna get raised, they're 0. The other two, if they get, it's 4%, kind of what do you think?
Are you guys with
Now, we need to figure, she can figure it, and then we'll see if we can do it for sure. And then,
what if we bump those to 5%, just to get them a little closer?
Oh, yeah, and then if you figure that's 4%, you must try to 4%, without having to do all the others.
What did you get last year? 4. What did you get before that? Maybe 2?
Yeah.
yeah,
Yeah, 2.
yeah, we did a stipend of 2, and a raise of 3.
So in 4 years, you can give us 12%.
5 years
ago,
ago.
it was 3% raise, 2% stipend.
If they stay.
If
Now, they had to stay the whole year, they didn't get it.
so it was a
There's a
2%
bonus
bonus
in
in November. And we did a stipend 2 years in a row.
Because we went to 4% for that raise.
Jacksonville, the pros and cons. Right. But I think in the case where he's actually requesting these 3 positions be leveled out, you can justify increasing those 2 positions.
Because she's not getting
Because
it.
you could even go 6% on each one of them.
Well, that's true, you're
Or
just
5.
that raise between the other.
Right.
But if you do 6 from each one of those two.
And the president always complained about those positions.
So
And I can tell you, I had a girl that waited in my office before Green County. And she was always getting offers from other counties. It's competitive 37.
So if we go 6% on each one of those,
43,700. You're gonna bump them by about first.
you're just bumping those 2.
The 2, the one's not getting it right.
You're gonna bump each one up 6.
Instead of her getting a low, a cut, like he said, we're just gonna keep her the same.
And here's the other question though, if you take a 41,226 times 6%, that's 43,700. But the other gal's getting paid 36,348.
That's,
But she'll get a 4% raise too. And he wants to spare her.
that, we just
He
paid.
didn't. They don't want to almost say level up.
Oh, so she's getting.
She's gonna get a good raise, but he knows that.
What we need to do is,
Bump the 2 up to 43,700.
Yep.
Leave the 1 at 45,088.
yeah,
So we're giving one a $7,000 raise.
Yep. He
what
is.
we wanted. And we're offsetting it with not giving a raise to the top one.
Yes. 43 what?
So the dollars between those 3 offices is actually being separated.
Right.
43,700.
That's his issue to deal with. Is
And corporate border, we stay at 45,088.
Yep.
in next year, it is even 12 years. Closer.
So, what you said that number was for the 2 that were
437.
And then we don't, the elected judges and prosecutor do not get a raise because that's paid for by the states. That 5,000 is always in there, it's been there as long as I've been on council, so it's $5,000. And then the clerical. So maybe part-time, we get them 4% too, correct? So the rest of them will all be 4% correct raises for your calculations.
So circuit court 6%.
For those two.
Just for those
We're
two.
gonna,
Okay. And then
Yeah.
4% on the rest and the other.
It's not 6% for the one.
No, not for the 40, the
Yeah,
court reporter, we're leaving her alone.
She's a
She's not
zero.
getting anything.
but the deputy bailiff is getting a much bigger raise.
6%.
Yeah, we understand.
It's basically 90% raise, it's a
Flat fee.
flat fee. It's 43,700.
So she's raised to 43,700.
For both actually, for both the,
601 and 607.
It's flat, 40, 30,
700.
700.
Yeah.
And you said that was 6% or just a flat fee?
It's
Doesn't matter.
well, it's 6% on the one that was making 41,296, but it's more than that on
Yeah,
the
just
other.
take that out of your head and just put flat fee.
Okay.
That would confuse me too, Patty, so.
And the state people's not getting ready, because the prosecutor is here,
No,
or the judges are, was there,
yes.
And Vernon's not.
we were, so right. Okay, and then community corrections, are they going to get their 50 cents? We put in 50 cents for each one.
Got what?
You put 50 cents instead of,
So it's out of the letter.
It's his budget.
leave it the way they are.
Okay, just,
What about Bob's moving the part-time or full-time?
Okay, so let's go ahead and go to that page.
He was of 130 on Tuesday.
145.
What was he wanting to do?
Take out a part-time person.
Trustee full-time position. And we said.
He was really only giving us $1,000.
Yeah, we put it up to 36,000.
Right, 36,618.
668, 690.
618, 36,618.
Did that include the 4% of what we normally pay?
No, that was last year's wage, is what Patty said. If she was working that job right now, she'd be making 36,618.
I thought we just said a flat 36,000.
That's not what she said, though.
What she did instead, she took her full-time hours times her part-time rate plus the 4% rate, so
I just took what.
15 something to 20 something.
She just took what a full-time person makes this year,
so it's 36.
618. Now, if you were going to give her a 4% raise, it'd be on top of that. If you want to do that, or you just want
I
to
don't
give her,
think.
that's what they're asking.
I'm going to say this because I went through this a couple of years ago. It's not even fun, but we have rates that we pay people. You know, like an average part-time or a part-time person, clerical, are getting 17.8, and we kind of do that across the board. And the same way here, this type of position. It was 21.61, and it's gonna go to something else. And whenever we do payroll and do all this, it really makes a lot easier to kind of keep them on par with whatever that is. So if the 4% times the hourly rate, then that gets you to what you times the number of hours we work. Does that make sense? What we ran into was, we ran into some rounding problems and everything else 2 years ago. And we said we're gonna give everyone a 4% raise. Well, was that 4% off my hourly rate or 4% off what was budgeted?
Oh, yeah.
And it ended up being a heck of a mess. And we ended up giving everybody at the beginning of this year
Some pennies, yes.
some pennies to straighten it all out. And speak of that. Because you need to play and determine.
There's a difference between the hourly rate and what they budgeted, and people think, well, I budgeted this much, so my hourly rate should be off of that now. And it's like, no, that's why we went to the hourly rate. The raise, the 4%, the raise is off of your hourly rate. Yes, it falls underneath your budget, but that's what it is.
Yeah, that's 4% of your hourly rate.
So you need to let them know that
Simple.
the raise is off their hourly rate and not what is budgeted.
I agree with that.
So that's
That only affects the part-time.
And the way their payroll works and everything else, you can't have tens and hundreds of pennies.
Well, so that's what needs to be stated in our meeting, that way it's stated, it's 4% on your
Big deal about
on your 2025 hourly rate, that'll be your pay for 2026. That way there's no discrepancy on what was budgeted for, it's based on your 2025 hourly rate.
Okay, so we know that, so what we need to make it on this one, let's get it on this position that we just created from part-time to full-time to bottom.
Okay, so
What's
now,
our hourly rate need to be?
if she was a full-time person for this year, it would be $20.07.
So we need that one, so 4 times that.
So the 4% would be 20,
You said, what did you say the hourly rate is?
187.
$20.07.
2087.
2087.
So it's an increase of 80 cents.
What's the full-time hours, 36?
28 to 36 hours.
It's 35 hours a week, so it's 70 hours.
That's 35.
But it's 261 days and not 260. So you want to take that times 261 days times 7 hours, and their budget would be for $38,135.
So that's actually that. Well, let's see if this works.
So we just tell everybody it's a 4% raise based on their hourly.
And not what they,
What's your salary?
How much is salary rate of 2025?
not what's in their budget.
Not what's in their budget. You need to say.
That's what needs to be stated at our meeting.
So here's, this is where it came into last year, right? So doing that calculation that we just did based off of the hourly rate, 2087 or 2007 for this year, 4% increase. This gal is gonna be 38,135. If you went off of 36,618, which would be a full-time position this year, and do the math, it's only 38,083. So there's
Are
70.
you looking at the budget from there?
Yeah, so there's like a $70 disparity between the two, and they should have been the same. That's where we ended up in trouble.
With people going, I didn't get.
Yeah.
That's why you have to say it right.
I guess that's what I'm trying to say.
Great job.
Back.
And that's what.
You don't know how many hours I spent on this last year, and how many people I had calling.
And that's why they didn't like my answer. They're like, well, no, we budgeted this amount.
So with our employees, if they're a part-time employee year 1 or part-time employee year 10, make the same number.
Mhm.
And full-time same one.
Yeah, we don't have,
A yearly bump.
that has been a discussion that of the past, we don't The sheriff's department does have a bit of a pay matrix, they do, but we don't do it here.
So are all,
It's,
but all part-time employees, you know, a full-time employee, hourly rate's not the same.
right. No, because, you know, you get different skills for different offices, obviously, different professional requirements.
So the only thing we need to address then is this I was requesting to go from part-time to full-time.
Right,
And everything else can be 4% raise on what you need this calendar year.
But this is probably the only exception we have in the whole group this year, because that's the only position we make full-time, I think.
it is.
We don't do that very often, to be honest with you, because we just don't like to. It's,
But with the bilingual, I think that's a,
Some places pay a little more
more
for
for
somebody,
bilingual.
like $2 to $3 more than the hour, so I not.
but she's going to get a significant raise, so she's going to be happy this year.
Yeah, so I have no problem with that, it's just my,
I agree with you.
she's
I
right.
agree with you.
Yeah, we need
How
to.
do you round the pennies up?
Yes, we.
We need to round it up.
You round, always round up.
We need to have somebody upstairs and argue about having to be.
Well,
there's a problem.
The problem is if you're at 20.8728 this year, and I give you another 4% next year, and I rounded that at 20.87, then that he lost the tenths and the hundreds.
Right.
And so we always round up, so the new rate is 20.83. Then we've given them the benefit of the doubt, so we need to probably bring the pennies out.
Cost of government, 20.5.
20.83. 88.
Yeah, it's 20.88,
It's 20.8728.
so we need it to be at 20.87.
You're rounding, that's if you're rounding down by half.
So again, if this is addressed in our meeting,
They won't
4%,
remember, but
but it's in the minutes.
I will send them to you.
No, it's in the minutes. That way they can't come back and say, well, we lost that 10, because we've said it's a 4% raise, we rounded to whatever.
So if that, we need to make sure we have this right, because I've heard it two different ways sitting here. You guys said if there's any odd cents, it's gonna go up. They just said it's gonna round up by the half, which is traditional. Which one's it gonna be? It's, because you said it should be 7 because you're rounding down.
20.07, which is the hourly rate right now at 4%, is 20.8728. So
So
it's
you round
at
up.
7 in my book.
Because of the two.
Because the 28 is
Oh.
lower
Because
than
of the 2 tenths.
Okay.
I'm saying that next year, they lose money next year on their raise because the 2 tenths are gone. And that's where we kind of ran into the problem. Well, that's not what we ran into. We ran into the problem with weekday versus non-weekday.
Because it comes to the $20, $20.8728.
Right.
Well, in my math learning, it's $20.87.
That's what I would say.
Yeah.
But
If it was
it was
$20,
stated differently, and if that's the way you want to do it, I don't have a problem with this, it's not normally.
I think if you stayed at 4%, round to the nearest penny.
So, and here's the deal too, right?
Double right there.
So that rounds down in that case.
So I agree with you if you're rounding to the tenths, but that 0.228 is, that's the thousands, no, that's 10,000.
Right.
It's not 10.
No, it's a tenth of a penny.
Yeah, it's
But, well, yeah. I'm just saying that over years, you keep losing those tenths of a penny. And it,
as long as we stated in our meeting, I think.
Yeah, but there's gonna be years though, just by the odds, that they're gonna round up.
It's gonna be 0.5, and they're gonna get an extra half a cent.
That's why it's so.
Which is good for this traditional is you round up at 50. So if you go 50, it goes up, and it's standing less, 50 is good.
They go along, that's traditional.
The odds are your advantage, because, the odds are 6 to their odds is gonna go up.
So you're running some numbers for us? Thank you.
you should have told you we ran.
No, I know.
I do recall, I remember.
I got to
parts
hear
of those
these
conversations.
complaints.
Jason, you and I talked about this.
Everybody's
All about disparities over
right, but not.
pennies, and I'm like, people are really upset about this.
Because they have nothing more to do than to figure it out. Get a broom.
So then, that's why I get it right, okay?
I know, said get them in the room, they wouldn't get clean during COVID.
That's true.
That's the goal.
Hey, I do want to bring this up while we're being recorded and while everybody's sitting here. I did get 2 phone calls yesterday evening after we left about the health department budget and the way it was being ran. And what I told both of those people, if the rules and regulations for the way the health department budget should be approved and disapproved based off the board members, that needs to be addressed by the board members, not us.
Exactly.
But they wanted to bring it up and they wanted to make sure that it was known that it's not being followed, the protocol's not being followed.
But that's not our issue.
Right. So, but it could be our issue if it comes back to where the proposed budget that we have in front of us doesn't get approved by the board.
I will tell you that in previous years, we did not, I mean, obviously we have some people on the health board now that are fairly proactive, want to do. In many years gone past, we did not have proactive help.
Right.
And a lot of times, we didn't even know
Who they were.
who they were, and so forth and so on. So, I mean, I know how this all kind of got started, and
I think the whole issue.
I still
the
believe
grant money
that.
dried up, right?
I still, yes. I mean, and I still believe that when we put a higher position that the county hires, as the head nurse, and we put her in head of that department, she has a lot of say. Now, if they want to micromanage, the board wants to micromanage that person. And I guess they can try to do that. Good luck keeping people.
Sure.
This is probably not going to happen.
And that's what I told them, it's up to the board and Kim to work this out,
Exactly.
to figure out how it needs to be done. But there again, if the budget gets disapproved by the board and
We approve.
we approve it, you know, where's that leave
Where's
us?
our liability?
Well, I will say this, and one of the reasons why I think it was important also to give, we had issues that were solved by quite honestly putting her in charge.
Absolutely.
And it is a hard position to fill when that is vacant, because nurses can make much more than what a county health nurse can make.
Sure.
And so you have to, there's a balance there. You have to have someone who's with, I believe that Kim, and I think previous health nurses we had as well, were very community oriented, that wanted to help the community, and that's why they took this job.
Sure.
If you want to beat people like that over the head very long, you're not going to have people who want to do it.
And I worked with her closely as superintendent during COVID. We don't really talk about the politics of COVID. She was working with her weight and goal during that time.
Sure.
Yes, she was.
And I'm not disproving Kim or anything.
No, no,
I know that. But I know, but I've heard some,
I wonder I'm like you, what's the liability if they don't approve it and we approve it?
it's probably about as much as liability we have on not being able to, we've actually, I think, was actually maybe their fire, we voted against their budget one year.
If that budget's
But it
already
didn't mean
being
anything.
advertised, there's nothing we can really do if he disapproves. We gotta live with what was advertised, am I correct?
Yes. And-
Okay, so.
Yeah, and I agree with that.
We got no choice. If it's been approved or if it's been advertised, and they decide to change, the board changes it, there's nothing we can do.
Sure.
I would see your proposal as a recommendation only.
Their proposal,
Yeah, as a recommendation, you have final say so.
You mean the health board?
Yes,
Yeah. Well, we are the fiduciary body, and this is not a non-binding budget in their case. Now, like your townships and all that, fire districts, those are non-binding, we can't bind them. That's why they call them non-binding, we can't bind them to their budget, we can say we don't like it, we've done that before. But it doesn't mean anything really, other than it tells the voters out there that the county council thinks they're making a mistake. But when it comes to the health budget, the buck still stops with us. And so we can't spend more than what they have. And I am not a micromanager, I hate it. I think it's a good way to destroy your morale in your organizations and it reduces efficiency. And now if you got somebody who's out there and they're a tyrant to work for, and that's all a different issue. I don't think we have.
If the employees are not beating down the door.
Right, and the problem is, I mean, I think that there was some disappointment because people got cut and they expressed that disappointment to the board. The board, just like any of us, like people, we favor people and we don't want them to see, but there's certain things you just can't control. No, I just work definitely cut.
What do you want to do with the election clerk part-time? She's needing, short a little bit more because of the election. So 18,000 would cover the extra. Because she doesn't work 4 days a week. So she's gonna be working a little bit more during election time.
I thought we cut out the clerical.
Not for the election clerk.
Oh, okay.
So she usually works either 2 or 3 days a week. But with the election time, it's county general 1,000, location 21.
We said 11 o'clock on Wednesday.
So, I mean, we can leave it at 18,000, that would still give her the 4% raise. And that would give her a little bit extra, but I didn't know if that's what you want to do. If she was working 4 days a week for 26 weeks, it would be around 23,000. Maybe
I don't get there.
and she still get a raise, she had some extra, funds to pay her during the election time, pay her extra. But still being within the budget.
So, yeah.
She got a new $1,000, or she got a new dollar.
Oh, I seen that in the paper. Or on Facebook. Good, that.
Oh,
Yeah, she has a similar. They should.
What's the middle of this? And this page, this has 1560.
That's the rate is. That's the correct part-time rate. That's the rate. So the 1560 will go to 1622. But she doesn't work 4 days a week.
I show that we zeroed that out.
Not the registration clerk. No,
Oh,
we zero out the clerical and location one.
Yeah.
But not
registration.
1560 goes to what?
1622. She doesn't work 4 days a week, just during election time.
So what are you saying?
Leave it there.
Leave it at 18,000.
Yeah.
Yeah.
Give her 4% raise and a little bit of extra to use.
Okay.
So back to some of the other things, the extension office, which was at 2:15 on Tuesday, they had requested the office manager and the program assistant go make the same amount.
They've been paying them the same amount for the past few years since Olivia and Natalie has started.
I just wonder if you want to break that with the budget.
What do you mean?
It would be,
They're still learning how to do the budget,
Uh,
but
What they requested, was that they look about the same amount. And I think we need to show that in the budget,
we can.
as opposed to taking their 2025 and multiplying by 1.04. So we have a better understanding of what we're doing, and that's what they asked.
There's only,
Finding out, $300.
$300 difference, so
So you're taking,
why don't we just take them both, give the 4%, 35 per and make both of the same?
yeah,
All right.
they were so nice, Mr. Baby, much of them were really nice young ladies. Let's get married Saturday.
Now,
The dark-headed one.
Natalie,
Six, 31.
yeah.
32.
So what's that make their rate?
The hourly rate.
Those are the new rates there.
Let's see.
The top one is.
The election, extension,
Oh,
they made 1883.
so they wanted to do that. 18.
That'd be 1958.
Did we also give a raise to the summer assistant then?
Yes, but they always
They don't.
don't, they don't do
They didn't
that.
request it,
Uh,
so we did that to stay the same at $15, so that's 41. 20.
They requested 42.40.
Oh, they did request it.
Requested $124 raise.
So if it's $15,
1560 is the rate,
$15.60,
but they're paying them $14.
okay. But do we still need to put that at $15.60?
That's up to you. If you leave it at the 14 and take the 4% on that.
If that's what they're doing, that's fine.
14.60 plus 4%.
14 even, I think.
14 even, so they'll be 1456. I think they were
Which makes it what?
9 weeks
How many hours it is?
per year. The 4244 would probably cover.
What?
The 4244 would probably cover, or we can make it 45.
How many hours is that?
290.
During fair time, they work 40 some hours, and, preparing for the fair, they work between 35 to 40 hours a week.
So
The 4120 divided by $14, which is what they're being paid right now, is 294 hours.
okay, so 294 times 14.60.
56.
4281.
If they're 4281,
And then that contractual services,
that's pretty,
yeah, and so they're saying it's 92,420, correct?
yes.
Of course, I guess they're not, go by Indian
We approved Rob's, part-time person. Emergency management.
I thought we did that as an additional last year.
No, we had a grant a few years ago, and so we did that. So now he's asking for a part-time assistant.
But he doesn't really want an assistant, he wants multiple people for what they
Two
do.
people, two or three. Just wants a line item to be able to pay two or three different.
But that's really not doing what we want it to do.
He was, Wednesday at 10 a.m.
So shouldn't we just put a hourly wage in here for a certain number of hours? How do you do this? That's up to him.
That's true.
I think the next question is the approval part-time.
Well, I do think, especially if had some health issues and so forth, maybe that we need to get somebody in there to back up and training ground for the person who takes over, so they possibly.
But I think his goal and our goal is not the same. His goal is to help people help with certain projects. Our goal is to get someone.
Well, but he did say though that's part of how they would learn. You know, we can have options down the road. If it's more than one person, there's probably going to be more than one person that at least has some interest in the job and gets. Or we would hire somebody out and live in. So, but he didn't ask for it in the budget. though.
Yeah, he did.
Did they ask for $25,000 part-time direct?
Okay, so, first of all, I guess, do you want to do it?
I think it's not a matter of if we want to do it, I think it's.
Needed.
Okay, so we need to do it, how many hours we want to pay for it?
But part-time is not 40 hours.
For how long, all year?
What's that equal out to the whole year, if you, based on the rate?
28 hours time for what? Do we do 52 weeks?
No, 50 weeks. Well, let's order some pizza.
Okay, I actually thought about
Order pizza.
that. Yeah,
I don't know, just don't deliver.
Yeah.
Excuse me. Yeah. Yes. I'll let you.
Take about 10-minute break.
Yeah.
What you said.
I'm sure if I had 8 hours a week, it's too much. 500 hours a week, right? Yeah, it's 1785. Right.
What's the new hourly rate for a part-time with the 4%?
1622.
I think that's what you go with.
Okay.
You want to pay more, but then you're just creating another one.
he asked for it.
Yeah.
I went, oh, it's the very top one.
You just,
I was expecting it to be the top one.
you would thought.
So, what do you think we should pay somebody like that?
Well, I tried to just do your part-time hourly.
Which is,
She just said, what was it?
1622, that's what she said.
That's what the new one would be for next year.
it's,
He's not going to use all that, he's just going to use it for projects.
how much was the part-time hour per year?
28,
28 times
23, 616, and 32 cents.
16. Let's see, there we got to round up.
Larry, I fly out to another 25 hours a week. I think 28 is too much.
Yeah, I think so too.
That way you're not, I think 28, 25 is
I
more.
mean, 28, that's only 7 less than full time.
Well, think about it. Just 1,300 hours. Let me step out here, 1,300 hours.
He almost $1,086.
Oh, that's a little
That's cool.
21,086.
And you guys wouldn't make much change.
The deputy that worked with me for one. Yep. Paul was talking about, we calculate what a full-time, or what a part-time would be for the year, 28 hours. Paul said that's too many hours. We cut it down to 25 hours a week. It's 16.22, it's 21,086.
Which is-
We just need to put in there, but that's 16.2.
Oh, I do too. I like her. It's just like a great job.
So what we do, Patty? Part-time deputy director to what?
21,86.
16.22 an hour, 25 hours a week, 25 hours a week. So it's total of 21,086.
21. You're close to me.
Probably at 80.
Yeah, all Larry's clothes now.
If his name's not Tommy Bahama, that's about as fashionable.
It's all in the phone.
Yeah. Tommy Bahama. Ralph Lauren on his side.
And then that $55,000, this is going back to 4% instead of
Yes.
11%.
That'll all change.
If you ever wear Tommy Bahama, you will very good. It's covered. It's the material that they make out of them. Their blue jeans are absolutely the best. That's the only thing I like. I feel like they're warm the first day you put them on. Like they're, you know, you got the first meeting. I got one of those shirts. I know how to get a look at their shirts, I do it. Yeah, I mean,
That's a one shirt type looking thing.
yeah, they used to do that almost exclusively.
Wore to a wedding.
In the marriage class.
Stuff
They try to warm that line. It's a light. That was a disastrous marriage. I realized. Yes, God was trying to tell them.
Nicole had asked for a bump on her first deputies, did we do anything with her?
She would have been, yes.
You want to create a little more disparity?
So you get 6% of a 4.
I'm just asking because I'm writing down all the exceptions of people we need to talk to if I vote for it.
This one and then the sheriff's, I think that's it.
Wednesday.
Circuit court.
That was one.
We already did that.
No, we didn't, but as far as talking to people individually,
Oh, yeah.
certainly, we need to talk to them.
What we need to do is when we have everybody come in and say there are going to be exceptions to that rule,
And we
we'll
will
talk
talk
to you, right? Yeah.
Because right now she's got them both at 87,696 comes to that. She is grouped those. And she's got them in at a 16% raise.
Well, they-
They work hard. Everybody works hard, they should.
Everybody says they work hard. And some people really do.
And yes, they do. Worked till 8:30 last night.
I would say I'm going to look when I'm actually watching baseball or because it's like it's going to be.
When it's happened, I'm kind of. My time's gonna come in. I'm after your job at the funeral home before long. I try to take your job at the funeral home before long.
Are you?
Yep,
Okay.
I'm retiring.
Pardon?
I'm gonna retire.
Oh, you are? How do you do that?
December 19th.
It was in the middle.
So there yesterday, I was a little surprised. But,
I'm gonna try to find something I want.
you know, we work as long as today to eat after money, she's got millions, she doesn't.
Well, they're keeping my work in.
There you go. That's what people ask me all the time when I can retire, I said, yeah, but
What is it?
it's really not nothing to do with age. The problem is, some people think it is age. It's like,
Charlie
you're not to work.
Charlie Reberger said everybody asked him when he was gonna retire, and he said Susie French will tell you.
That's good.
At his funeral, at the end, you know, when they release people, Susie stood up and said Charlie has retired.
That's good. I did not know that.
Yeah. He used to say that
All the time.
Susie French will announce my
And she did.
That's pretty good. So we go to prosecutor, IVD, Attorney General.
Okay, hold on, before we do that. Let's go ahead and make our decision out on this clerk deal while we're here.
Well, right here. We're on Wednesday at 11 o'clock.
So she wanted,
Her first and second, her two first deputies.
to be paid more than, she wanted to create a bigger disparity between them and the deputies, correct?
So what does each one make now? I mean, she's got to improve.
It's probably
The deputies make $20.07. The first deputies make $20.61.
The deputies make how much?
20.07.
And the first deputy makes,
206.4.
there isn't much difference.
Oh, no.
So why don't we do 6% to the first deputies and 4% to the deputies?
Sounds fine.
Create a bigger disparity. We've got several offices that have been wanting to do this for the year, and I think
It used to be this.
Do you want to do
that's
that with
because
all the
we're
officers
getting
or
high raises. Thanks.
are you going to do that with all the other officers?
Well, the ones
There's
that,
only, and because like my office,
did you ask for your budget?
I did increase it. Yes, I did.
You increased it, but did you create a bigger disparity?
Yes, I did.
Okay.
I made $1 for my first deputies and I made $2 for
I don't remember you saying that in your meeting, in your here.
I remember seeing.
We didn't talk about the old ones.
Well, that's true, but
They,
if there's exceptions, they always talk about
like they accept, like her saying she wanted more disparity between the two.
it. I honestly don't have a problem creating bigger disparities. Because it needs to be done. You can't have supervisory 500 people making the same as people that are being supervised.
Especially if they have more responsibilities, rather than if.
I
I'm
believe
more
there's
responsibility than you, only making a few systems probably each year.
That's the problem I've got with the office, that is, first deputy, because for some reason, the office over is out. You got two people in there, they're equal pay, doing the same job, and there's no buck stop charge. Where's the buck stop? There's a problem.
So,
That's the problem I got with the first deputies.
but again, that is elected official
I
prerogative.
understand that's what they want to do, but I don't understand.
But it's supposed to stop with her in that case.
I just don't understand the philosophy. I wasn't here the reason for that.
But it goes back to, you know, if they want it, we can create it, if they don't want it, I'm not gonna micromanage.
And I know it's, same thing with defense administrator, everybody equal, with equal responsibilities. And I don't know which office, but I'm saying, right, two other people in here, pretty much they need equal responsibility.
I just think equal responsibilities is communism, so. There just needs to be some.
There's always time. Yeah.
For this one.
I've heard this say that.
It's true. Look at
We
this.
just went.
You guys read it, indicated for years.
Yeah.
It's how we're born.
I would say, women inmates, who is your first mate? Guys, like enough to shit around, you know, get older.
When it's in the kid,
And then we would go on, but I cheat, that's, but there's a few minutes, there's a go back and forth, there's no need to.
women, I can say it because I'm men. You guys can't say a word, but I can.
So, turn back and.
This time we don't care.
I mean, we
You're
care.
not smart at y'all, then we can go get one.
That's what we do.
That's just the way it is.
If you push the job probably out for a while, on this one. But, you know,
You'll
come
have
on,
dinner.
hey, come on.
Yeah.
Come on.
Get lunch, I may be stuck in food.
And you'll laugh about it.
Pizza or something. So we do that.
I'm not even talking about it, you know.
Yeah,
You
we
never
do.
ordering pizza or anything? We need to do that. We need to make. Now, motion like this. Yes, how many pieces we need? I'll order.
Give me three, you always say, come.
Just one for Jason, two pizzas, I think. You guys will leave, right? So, it's probably three pizzas plus everybody will want the same thing. Okay, what people don't want? All we need is.
Supreme.
Well,
Oh,
anybody say, I only want pepperoni, I only want cheese pizza,
Get one with just pepperoni and then surprise.
would
Bring in Domino's.
I don't, that's the only one that delivers in town, probably.
Quickest.
Yeah, I think.
It's right across the street.
A Domino's out for my phone.
Used to go 30 minutes or it was free. It said it used to be 30 minutes or it was free.
Yeah, they quit doing that for a
Well,
liability.
you know, they didn't call it, that's why we were out. We need a tree.
Train.
Make one of them the extravaganza.
Got nothing in the budget for that?
As long as I'm not driving, I don't think it is.
Yes.
I mean, it's like,
It is, it's extreme.
You can open the window, but they go
Turn
for it.
down to 16.
It's not worth it.
It's too cold. It's probably too cold outside for the very.
Is that what we're doing?
6 and 4 and you with hers too.
Maybe that's what we just kind of need to do for every office, the sense of it looks like. Is
6
that
and
you
4.
can't create disparity between the
Are you
chief deputy and
listening? Yeah.
deputies, we make 6 chief and 4 right?
Leave the season.
6 and 4.
6% increase to the first
First
deputy and 4% so that we create a bigger disparity.
to the offices that wanted it. Okay.
Which would be, what she just said.
It- It's only a handful,
Yeah, okay.
not very many at all,
That didn't want,
right?
I know that, okay, go back to the sheriff's office, you got the chief deputy.
we're not doing it.
Oh,
They're
okay.
different.
Okay, I just like
They
that.
are.
Are we doing 6?
No, they have a matrix and all that other.
Oh, no, I understand those, kind of thrown off there.
No, we're not doing the jail.
Gotcha.
You'd be there forever trying to figure this out.
We do for the, for, for, We're just gonna do the 36 and 13, so.
That's the one you want to go back to, Superior.
Oh, I think you need to go back to the beginning, go through everything.
Let me get
We can jump around all over, because I make it.
Get some.
Well, we just, that's what I'm saying, whichever one we all fix, then let's go to.
I think we did, I think we did.
So we fixed the clerk, right?
Hold on, I only got a few more, so.
Screw it.
Yeah.
How about meat stuff and, the locks,
What's that, said, veg time?
what's that?
We don't know, she's just messing with me.
No, I don't eat vegetarian, nothing. You want hand toss? You want Parmesan crust, handmade, crusty thin, New York style with gluten free. I'm gonna get one hand toss, I'm gonna get one bacon, that's actually what I prefer.
Okay, so
We're vegetarian.
You're a vegetarian, right? That would be used.
what makes good garden?
Even, you want black olives, like to me, that's an extra on the lots.
I can only see black olives.
Well, I can too. It's like the anything on the luxury now, water. No, they had that, so
No, if it's more about
it's like, get it, you gotta put it on there anyways, it's for the springs, will have everything.
Like extravaganza and everything.
Extravagant, on this stuff.
Pepperoni and Italian sausage and beef.
Oh, that's extra, oh, yeah, I thought that was just meat. That's got everything.
That's everything.
Okay, we'll get one.
Brian, you want anything to do today?
I ain't gonna get this one on.
She, that was true. She's just started. Everything. She said share.
Jimmy Harrison is like, I don't think so. Lois, Trail.
Where you want me to pick that up?
No, they're delivered.
Check out up to the real estate, where we have
Sergeant's work.
Like her a lot. I taught her graduate '94, so right behind her. Notice, I think was a senior thing.
And then the outline that I do.
I guess you guys would have been senior, when Jamie was here, so a freshman. She was in the car.
Yeah, I do, I don't want to do it.
That was the first place I thought.
Graduated '94. Freshman out there now.
Yeah, maximum.
It's that way with the pizza and the rest of it.
Right there, oven.
Well. Is there anything like if people don't like mushroom? I love it.
He's still working, he's gonna make it on that.
Oh, I ordered 3 different ones that didn't make it. Okay, during sweet, right?
Yeah, it's easier.
Nobody wants breadsticks or anything. How about dessert?
Stick it like some cookies and brownies.
Yeah,
Types of sugar, nothing.
round it up to the rates.
Anyway, last thing. The repeat on that page. Actually, they're gonna really right. And they keep us.
The bad thing about it now,
We show this. I'm sorry, that's good. Here's this one, but,
That's always nice. Try it.
Bingo, hit me. And they were stuck. One right here, he was nothing actually.
this email, I did to read that, but why didn't you tell me that's what I asked? It said I should have it, you know, what it is, and I did, it said it didn't have it. I was like, what to do?
Because
You can't find another.
Okay, so I've got plenty of general in there, if you wanna go line by line or whatever, but first I need to go to the right.
just the machine up there, just make money.
Yeah.
Okay,
Does it take?
you like that.
We've been talking about money all day, but it really is.
I use money, I use
Let's do it.
So she did one side, but she also she signed this pretty bill.
So, the county council president gets paid slightly more than everybody else, so this will come out of my president's budget. I think that's about all of it right there.
I use money for it.
No. It's okay, donate to your favorite tier.
Yes.
I know, talk back, say. Okay. Where's the agreement? That's where we stay.
Patty, go. She went to the restaurant, I was gonna see, got some bites on that.
Surely it's somewhere in this quarter, I bet it's got that for $75.
Excited.
So your dogs eat.
This is all, I think, here.
You have dogs there, though?
Oh, yeah.
Well,
Got,
Patty, do you have any plates and napkins? Okay,
he's got 2 turtles and rears. And he does that shit everything else.
Susan needed that.
this is what's up, I've been there.